There's one thing about debt. It continues to rise without question. Over time, there's more debt. What has been a constant is that since 1980, rates have been declining. When interest rates are lower, financing debt becomes easier. This allows governments to pay back their unbelievably massive debt loads without defaulting. While many people are saddled with credit card debt at 17% interest, financial institutions are using the system of debt to their advantage. It's a different world depending on where you look. You came here for the truth, so let me unveil that for you today. We're going to look at what the central banks are doing today. We'll talk about debt in general. I want to cover various issues. Let's get into it right away. This was an interesting article out of Bloomberg, and it was really what started this video today. I wanted to get into it because it's so important, and I want you to keep it in the back of your mind as you move through the next few months and so on. A $13 trillion debt bill comes due for big economies. G7 emerging market economies face the biggest refinancings in a decade. Central banks are currently keeping yields low. We know that it's happening all over the place. There have been hundreds of rate cuts in 2020 alone. Okay, so you know that this has been a trend, not just in one place, but all over the world. The world's biggest economies shouldering record debt burdens are about to confront an unwelcome legacy of the financial crisis, a $13 trillion debt bill. The group of 7 nations plus key emerging markets face the heaviest bond maturities in at least a decade, much of them borrowing to dig their economies out of the worst slump since the Great Depression. These governments may need to roll over 51% more debt than in 2020. So you know that there is a serious issue happening. I'll give you this chart in just a second, but I want to highlight the fact that when they're keeping interest rates low, this allows them to continue, or else they simply can't even pay the interest on the debt. That's how bad things are right now. The interest on the debt continues to rise. It's not just the amount of debt, but actually the interest, total interest payments. So if you keep that low, it becomes, let's just say, I don't want to say mathematically possible because it is impossible. However, they can say, well, you know what, things are okay. We don't have to worry, but it's going crazy. It's going skyrocketing high right now. The good news is that both central banks and investors are on their side. Policymakers are facing lingering economic challenges and are likely to stay accommodative and keep borrowing costs low. That's right, you can keep the borrowing costs low, make everything continue to simply kick the can down the road. As you know, right here, they tell you you don't have to worry because as long as it's manageable, all debt is not a problem. 2021's biggest debt maturities, you could see the difference between the principal and the interest. Clearly, the US has a lot coming. A lot of this. Now, I don't know why they wrote it this way, 8,000 billion, but regardless, we're looking at about $7 trillion worth for the United States. $7 trillion worth. Japan looks like it's somewhere around 3 trillion. Then you've got the UK, Germany, and so on. It is significant no matter how you slice it because you have to figure what they are trying to do right here is to postpone the inevitable. That's really just what I wanted to talk about to start off this video. We're looking at a situation that is mathematically impossible to pay back. The only way out is to devalue the currency to the point in which paying off the debt is rather easy. If suddenly your dollars are worth half of what they were just a year or two ago, it looks a lot easier to pay off this mounting debt that clearly they have no intention on paying off. It's not you with your credit card debt at 17%. They have a different scenario happening. Yes, they're paying it at a low interest rate, but the amount of debt is accumulating so rapidly. We've never been in a situation like this before. This cannot be resolved by their activities, okay? You can bring interest rates into the negative if you want. That's not going to solve it. Look at the countries that have a lot of debt and that have negative interest rates. They're still encountering the same problems. You cannot manage debt that is being created faster than the growth of your economy. That is a fact. That is pretty obvious, but we're still here looking at it in slow motion. It's all happening right here. It's a slow moving train wreck, and we are witnesses to it all. Because of what's been happening, all the speculation in the market, all the central bank intervention, everything top to bottom, we have seen things that have become very wacky. One of those is that Tesla stock has just gone parabolic. Okay, it's gone parabolic, and as a result, you see Elon Musk, his wealth has increased dramatically. Elon Musk is now the richest person in the world, passing Jeff Bezos. It wasn't long ago that he became the second richest person in the world, and there was a huge gap in between him and Bezos, and now he went even further. His net worth, $185 billion. Just the beginning, they say it in here, I believe, beginning of 2020, it was just a fraction. He was still a billionaire, obviously, but it was just a fraction. So in a period of 1 year, he absolutely multiplied his wealth, beyond somebody like Bezos, who increased his wealth significantly as well. So we're seeing something today that has never been experienced before. Right here, they're talking about the new administration and what the expectations are in terms of taxation. Up to $2 trillion worth of tax increases over the next decade. That's the expectation. We'll see what happens. And you can look at everything that's been going on up until this point here. There has been, in many different places, we have seen an increase in taxes. That comes in different forms. It might be a gas tax, it might be a carbon tax, it might be a tax on your income. They're talking about the wealth taxes in different places. But over time, generally, taxes continue to increase. Some places, in some periods of time, we do see tax cuts. But overall, the taxes that people pay are just surging everywhere. And a lot of the time, you see that's actually being hidden. You might go pay for gas at the pump and you wonder, hey, that gas is 5 cents more expensive now, or whatever it is. And what you didn't realize was that now there's a tax that they're putting in there. It's snuck into the total fee. You don't realize if you're just paying at the pump. Okay, done. I put my gas in and I go. But in there are hidden fees. The same thing might be applying to, you buying chicken and anything else. They hide those fees in there because it's applied to the business and they pass it on to you, the consumer. Now, that is never a good thing, of course, because the taxation generally is wasted, it's squandered, and that's a whole different story. I think the expectation here is that there's going to be a $2,000 stimulus that's going to be put out to everybody. That's what they need right now. That's what they're going to get right now. At least that's the way it seems. That will probably be a quick pass, as they say anyway. But I'm noticing something with this $2,000. What does it really give people? Well, it buys them some time, sure. How long will that take to pass? Maybe sometime in February, we'll see what happens. But ultimately, that's not going to get them a job. It's not going to make them a consistent income. You could extend those unemployment benefits as long as you want. But if the person's living in a tent, they're not going to be able to actually sustain themselves for a long period. This is a fundamental issue that is taking place. And I'll repeat myself over and over again. But quite frankly, if the central banks weren't doing what they were doing, things really would be a lot better. And it goes not the direct correlation between interest rates and what's happening now. No, you got to go back in history to see the truth. Manhattan office vacancies soar to record with leasing frozen. I think this was pretty obvious when you see it, how many businesses have been shut down or others that have simply decided to no longer need as much of the real estate as they did before. There's been a lot of problems in retail, in office, and so, a few other industries, but certainly Manhattan, one of the places where it's been hit the hardest. I'm not going to, just continue to beat a dead horse with this. I've covered this very often. Here are the stats if you want to check it out. Quick fact here related to gold. I thought this was interesting. Sales on US gold and silver bullion coins at the US Mint hit a 4-year high in 2020. The Mint sold 884,000 ounces of American Gold Eagle coins last year. That is a 455% increase over what they sold in 2019, the highest level of gold coin sales since 2016. This is massive because what I find here is that there's a huge disparity in between the paper market and the actual physical gold market. Physical gold and silver, of course, is in high demand, and it's been like that for years. And you find in many cases people say, I tried to get some, couldn't get it. Now, what does that tell you? Of course, you could probably search around, you could probably find it, but reputable dealers are what I would suggest are hard to come by. But anyway, what you can see here is that there is demand for the physical. The paper markets, they can do whatever they want. It's a derivative, it's paper. It doesn't have to be there. They'll tell you that it's all there, just like Fort Knox. What was it, Munchkin who went there and said, the gold's here, trust me. I mean, it's ridiculous. But anyway, this is something that I think is important to note. Whenever you're looking at anything, understand what's going on in the paper markets and then look at the physical side. It's two very different things. Canada's international trade slows in sign of weakening recovery. Exports increased just 0.5% in November. Imports fall. I thought this was just something to mention here because you could see that in general, what we have noted that recoveries seem to be in many places starting to slow down, not contracting like they did, let's say March 2020, where everything started to fall. Then we had it coming back up. This is a slower and sort of, it's all in pockets because you could look at certain areas and they're doing better than others. But if we were to say, what's happening with the restaurant industry, what's happening with this industry or that industry, I think the general trend is sort of a weakening or a slowing process here. And it's going on US and Canada and Europe and other places. If you're shutting down industries, obviously that's going to show up in the statistics. With all of the stimulus that's taking place, clearly the money has to go somewhere, and one of those places has been Bitcoin. It hit $40,000, and that's unbelievable. You look at the market cap of all the cryptos, and it hits $1 trillion, over $1 trillion, and that is a record at this point right now. You look at what Novogratz had to say. When it comes to the young people's hands, they are going right into their Robinhood app accounts. One of the most unique things last time was seeing how many people bought Bitcoin with the exact amount of stimulus. So we are seeing this going on today. You can look at the stimulus checks, see that the exact amount was purchased through Robinhood. They've said that the people, I believe is the heads of Robinhood, were talking about this as an absolute fact. And you're looking at the same thing going on today. It's something that I think is not really good. It's not a good sign, because why are people that are buying into their stocks and Bitcoin and so on receiving stimulus checks? It's supposed to help people. It's supposed to get the economy going again. And meanwhile, the money is being handed to Apple and Amazon. That's what I'm saying. I understand. I'm not saying that people shouldn't do that. They should do whatever they want with it. But what I'm saying is it's not necessarily going to somebody who really needs it if this is the case. You tell me what you think. Put it in the comments. Quick point here, this Gallup poll had mentioned a big change that's been going on, and that is very clear, where 48% now prefer to live in a town or rural area. That's up from 39% in 2018. Preference for cities fairly steady, while desire for suburbs dips. So this is going in pretty big time right now. You can see the trend that's been happening as a result of more people working from home and so on. This is changing at a rate that really was not expected. A little bit of humor here and sort of an oddball situation, but the Vatican denies knowledge of $1.8 billion transferred to Australia. The information coming out of Reuters, you can see right here, they denied the knowledge of transfers worth $1.8 billion, which Australia's financial watchdog says have been sent from Rome to Australia in the past 7 years. That amount of money and that number of transfers did not leave the Vatican City. What was the money going for? What's going on here? I don't know necessarily, but I wanted to bring it to you because you know the power that this institution holds. They are much, much more powerful. Their financial arm has a lot of pull, and it goes back thousands of years. Okay, so check out this article here. For millions of Americans who use online tax services, their second stimulus payment may have been sent to the wrong bank account. This is unbelievable because they're trying to do something at the federal level. They're talking about millions and millions of people. How in the world is the government supposed to administer all this in a successful manner? It's too difficult. This shouldn't be done in this way, but of course, this is what it's all about, and they continuously have issues. This is just one of them. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce, you want to learn how to sell stuff online and actually make money, you can do so for free, 100% for free, the AmazonGPS.com. If you want to learn about the financial system, talking about central banks, talking about how to make money, all of that is covered in these 2 books. Check it out at the link in the description. If you want the audiobook instead, that's available at themoneygps.com. Wait a second, don't go anywhere. Have you seen this video yet? This is from yesterday. I would highly recommend checking it out. Click it. I'll see you there.